NVIDIA have just reported their earnings minutes ago, going from negative 5% after hours, now up 7%. So what is going on in today's episode? We're going to take a look at the release of their earnings. We're going to discuss some of their record revenues they have just reported today. And we're also going to do a bit of a deeper dive from the publication they have just released, taking a look at all of the increases in terms of their revenues, their gross margin, their operating income. They have truly had another outstanding earnings report. And as always, we'll take a look not just at their dividend safety, which is very minuscule, but we'll take a look at some of their financial metrics, their free cash flow, their net debt to EBITDA. We'll take a look at see what the institutions have been doing leading up to this earnings, whether they've been buying or selling. We'll discuss some insider selling that we have noted from a few different directors and their principal accounting officer. We'll quickly talk about how they're beating the competition, others in the industry, Broadcom, Taiwan Semiconductors, and a few others. And we'll do a very quick recap on how strong their top line as well as their bottom line has been increasing year on year. And we'll very quickly look at the health of this company, their total cash versus their total debt. And as always, the most important thing is we'll look towards the valuation now based on the share price, getting to our intrinsic value based on their earnings tonight. We'll take a look at our acceptable buy price, run through our investor margin of safety, and see now what Wall Street are forecasting for the share price over the next 12 months. So let's start off with their performance right now. As we can see in the pre-market, or in fact after hours, they're up 8.3%. Over the last year, up 227%, and we can see they are trading towards that 52-week high. They do have a yield of very tiny 0.02%, and their forward PE sits very high at 56. Now, if this is a company you have been owning over the last 10 years, well, you would be very, very happy, up 14,500%. Absolutely astronomical. Now, let's take a look at their earnings and see how well they have performed tonight. So in terms of their earnings, we can see they post record revenue up 265%, again putting this all towards the booming AI business, which has seen some astronomical top line as well as bottom line increases for NVIDIA. So we can see they have beaten both on the revenue as well as their earnings per share on the current quarter. And again, their primary beneficiary, they do put this positiveness onto the technological industry's obsession, or in fact the large obsession they have with AI, artificial intelligence. So in terms of the actual numbers, for those that want to see the details, earnings per share coming in this quarter at $5.15 versus $4.64 that the analysts were targeting, an absolutely strong beat. And in terms of revenue, $22.10 billion versus 20.62. So absolutely incredible, both on the earnings per share and the revenue. And when we take a look at this versus the previous quarter as well as the year-on-year increase, well, this is what we can see. We can take a look in terms of the GAAP and the non-GAAP basis. But for today, we will focus on the non-GAAP numbers. Now, in terms of the revenue, Q4 of FY24, as we mentioned, 22 looking very strong there. When we compare that to Q3, so the last quarter, an increase, very, very strong, up 22%. If we want to compare that to the quarter from FY22 or 23, up 265%. Quarter on quarter, gross margins up 1.7 percentage points. Up 10.6 year on year, absolutely strong on every single line. When we look at their operating income, up 28%, year on year up 563%. Now, yes, they are also up on their operating expenses, up 9%, and in fact up year on year 25%. But when we look at their operating income as well as their net income, absolutely strong, up 28% and up 491%. So they have performed very, very stellar earnings in Q4 FY24. Q3 was also absolutely incredible when we compared it to the previous quarter, but they have been even stronger year on year. And when we take a look at their revenues from 2012, 3.9 billion, Q4 61 billion. So absolutely incredible growth year on year. Very, very strong performance from NVIDIA. Now, when we do break it down into the different revenue streams, we can see the data center has had some very, very strong growth. Now, one of the things we wanted to point out on their quarterly revenue by trend and the market, we can see the largest growth has come from the data centers, increasing very, very strongly, not over from the Q4 2023 from 3.6 million to essentially 18.4. But also the increase that we even see from the previous quarter from 14.5 million to 18.4. So this is a company that is not only having these outlandish earnings expectations by Wall Street, but they are smashing them. As we saw, they beat their earnings estimation with the largest growth coming from the data centers. So NVIDIA, whilst we do expect the growth to slow down at some point, right now it is not looking like slowing down, and it could be one for the bulls to celebrate today. Now we can also take a look and see what the institutions are doing. Now around 65% of institutional ownership, 47 billion worth of sales by these institutions over the last 12 months, but a significant amount more of buying over the same period, 660 billion. So we can see institutions are continuing to buy shares, with the largest buy, yes, coming in Q2, so a few quarters ago. But even when we look towards the most latest quarter by the institutions, Q4, 39 billion versus 12 billion sales. Now, it doesn't necessarily mean just because institutions are buying, you should also buy. Always do your own due diligence. Now, we've also run them through the screener, and what this essentially shows is any insider buying or selling. As we always say, insider buying is bullish because management buy for one reason: they believe the share price will go up. Whereas insiders sell for a number of reasons, personal or financial. And what we will say is, in this screener, whilst we have seen the director Mark Stevens sell twice, as well as a few other insider members, we can see even from that point, the share price has gone up significantly, around 20 to 37% on each sale. So again, always take this with a pinch of salt. And it's also important to know, as I mentioned previously, to do your own due diligence. And for those who want to take a look at big companies that have done some insider buying as well as insider selling, we have released our latest free weekly newsletter discussing just that. As always though, if you do want to take a look, completely free to sign up by clicking on that pinned comment below. Now, very quickly, looking at how they've performed versus others in the semiconductor industry, we have Broadcom, absolutely phenomenal company, as well as Taiwan Semiconductors and a few others. Well, over the last year, NVIDIA, no surprise, up 227%. When we compare that to the next best company, we have Avgo up 116%, AMD up 114%. So we can see NVIDIA is a big winner by a large mile. Now, when we do change this to the last 5 years, we do see up even stronger performance by NVIDIA, 1,646%. But as we always say on the channel, past performance is never an indicator of future performance. So again, do bear that in mind. Now, what we can quickly do is have a look at their previous numbers on the top line as well as the bottom line. For typical mature companies, we're looking for 3 to 7% growth year on year. 11.7 billion in Jan 2019. Do bear in mind this isn't a mature company, fast growing. 11.7 billion in 2019, as we can see, expected around 45 billion in that latest annual report. So they increased their top line by 4 times over the last 5 years. Absolutely incredible. In fact, even over the last 6 years, absolutely insane. In Jan 2019, we do see a bit of an inconsistency, dropping in Jan 2020 before increasing up to 2022, before remaining fairly flat as we discussed earlier, and then an substantial increase. So top line very, very well. When we take a look at the bottom line net income, 4.1 billion in 2019 to 18.9 billion over that 6-year period. And yes, granted, we do again see some inconsistencies. A drop to 2020 before increases to 2022, another drop and then an increase. So inconsistent both top line and bottom line, but over the longer term we are seeing some very, very strong increases to their revenue and net income. Quick health check, total cash versus total debt, 7.4 billion in Jan 2019. And when we compare this to their latest quarterly report, again, a large cash position, and has increased to around 18.3 billion. So how does that compare to the total debt that they have now numerically and directionally? Well, what we can see, it has increased from around 1.9 billion to 2 billion-ish to around 11 billion. So yes, we see the cash increase, but so has their total debt. Nonetheless, their total debt is large enough to pay off that total debt at any point if they needed. So let's take a look at their dividend safety. So we have a score of 89, very safe. Market cap 1.7 trillion. It is a mega cap company. In terms of recessionary metric, they didn't pay a dividend in the last recession. They had below average growth, a negative 35% versus the S&P's negative 12%, and they also trailed the S&P negative 78 to the S&P's negative 55%. Last 5 years, 2% increase year on year. Last 10 years, 24% increase. So yes, whilst it has been strong over the last 10 years, in the more recent period, pretty much looking flat. In terms of dividend yield theory, not particularly relevant for NVIDIA given how small their yield is. As we can see though, if we were to look at it, it would give us a sign of overvaluation, given the yield is around 0.02% versus that 5-year average. And we do see, however, the forward P is looking lower at 34 versus the 5-year average of 41. Although do bear in mind, we don't look at any of these models in isolation, and we will conclude towards the end. Information technology is also sitting lower at 26.9. Now again, pretty redundant, but we will discuss it just to be continuous as our other episodes. In terms of the payout ratio, as always, free cash flow is what we look to. Earnings is susceptible to manipulation by management through accounting. And we like to see below 50% for semiconductors. Well, as we see NVIDIA, 10% in 2023, expected to be 1% in 2024. No surprises there, especially given the fact that their yield is very small and they don't expect to increase that dividend. So in terms of the free cash flow per share, absolutely astronomical, 25 cents in 2014, 153 in 2023. They're expecting 2024 to $18, so some insane growth over the last 10 years, as can be seen throughout the earnings and the analysis we did at the beginning. Sales growth as well, very, very strong, as we just ran through when looking at that quarter on quarter, and we can see that evidence here as well. So numerically speaking, we see it go from around 4 billion to around 27 billion in 2023. 2024 expected around 45 billion. So whilst it isn't very, very essential consistent, we do see very, very large growth, astronomical in fact, over the longer term. ROIC, as always, it is one of my 7 golden dividend metrics. Do read that newsletter as I do run through all 7. What I want to see, 10% or more, gives me faith that management are able to effectively allocate their capital. 16% in 2023, 46% expected from the trailing 12 months. Very, very strong. Lots of very positive metrics here, but also some just to keep an eye on. Both operating margin and free cash flow margin looking very positive, above the minimums, 16%, 23 at 21%, trailing 12 months at 46%, and we see the free cash flow margin 14% in 2023, again trailing 12 months, very, very strong. Finally, as we ran through when we looked at the balance sheet and the health, net debt to earnings before interest, tax, depreciation, amortization shows us 2 things, balance sheet strength as well as dividend safety. What we can see here is these are the number of years it would take them to pay off all of their debt net of cash on hand. Over the last 10 years, given how strong their balance sheet has been, it wouldn't even take them 1 day. Absolutely phenomenal. So let's jump into the valuation. As always, if you do enjoy the content, values being provided, smash that like button, hit that subscribe and bell button so you are continually notified of these videos as they drop. Now, typically on the channel, we do run through every single one of these models. However, for NVIDIA, we only believe the discounted cash flow model to be relevant. And what we have is their free cash flows year on year. Average growth rate, 30%. Now, forward-looking, analysts are expecting very, very large amounts. In fact, nearly triple digits. So we have gone a lot more conservative. With a discount rate at 8%, we get the present value of future free cash flows and terminal value. Add together with the cash, subtract total debt, get to the equity value, divide by shares outstanding, and we get an intrinsic value at just above the market value. So whilst we do have an undervaluation signal, we can see it isn't too far off, and it will be interesting to see where it opens when the market opens in the morning. So as always, the intrinsic value, whilst it is typically the average of the 4 models, for NVIDIA we only believe the DCF model to be irrelevant, or relevant in fact, so $751. As always though, you can grab a copy of this model to get to the intrinsic value and the acceptable buy price of companies in your own portfolio and on your watch list by clicking on the pinned comment below. Margin of safety then, we use 10%, and we use that if we believe it meets 3 criteria: a wide moat, strong financial metrics and good forward-looking data. So we can see we don't really see a 10% margin of safety. At 5%, again, it isn't too far off, so we see between 0 to 5% margin of safety at the current trading value. In terms of Wall Street and their forecast over the next 12 months, there are many different forecasts, lots of them quite outlandish, so we have gone for an average over a few different Wall Street analysts, and it comes to just under $750, not too far off our intrinsic value, so they see around 3% upside over the next 12 months. And as always, when share prices increase, analysts keep revising their essential forecasts, making them higher and higher. So again, don't take too much notice to what Wall Street say and always do your own due diligence. As always though, do let me know your thoughts in the comments below, whether or not with these earnings you have been buying, or maybe you're very happy as you already hold them in your portfolio. For me personally, this isn't one I do hold directly. In fact, I hold it indirectly through ETFs, but I'm interested to hear your thoughts whether or not this is one that maybe you will in fact start to buy when the market opens tomorrow, or maybe you're going to sell because you believe we've reached the top. As always, have a great day. If you enjoyed today's episode, smash that like button, hit that subscribe and bell button so you are continually notified of these videos as they drop. And for now, bye-bye.